Hey everybody, welcome back to the channel. So I have an update for you guys on my passive income portfolio that I have on WealthSimple Trade. So portfolio values at 23,207 with the RRSP being up 28.6% all time, which is a smaller account, and my TFSA, which is the larger account, is up 1.63%. But I have a bit of bad news, especially if you are an HYLD shareholder. So that is that they cut their distribution by 14%. So let's get into that. So at HYLD, essentially, they're saying that they're reducing the distribution from 14 cents a month to 12 cents a month, and the yield is still overall pretty strong at 11.7%. And the main reasoning behind that change is going to be the payout ratio has not been as stable as they want it to be. There are some months here, if you see in like February and April, where their payout ratio has exceeded, almost 102% at the most. Generally, they want to keep it at about the 99% ratio. They want to give as much as they can distributions. And you have to keep in mind that HYLD actually just holds a bunch of other covered call ETFs like QYLD, RYLD, XYLD. And then a lot of these funds lately have decreased their dividends. As a result, HYLD is getting less dividends than before. And that can partially be attributed to just having a lot less volatility in the market. Generally, when there's a lot less volatility in the market, the call option premiums are lower. Hence, these covered call ETFs will produce lower income. So unfortunately for right now, they just want to ensure that the distribution is stable, and they want to ensure the longevity of the fund. So I can understand why they reduced the distribution to just keep it, safe and steady for the long term, because that's what I want this fund to do. I want a steady stream of passive income over the long term. So, rather than being upset at Hamilton, which, it is actually showing you the payout ratio of their fund. A lot of covered call ETFs actually don't even show this at all. So it's not. I like how they're transparent about this and how they're communicating it and showing it effectively with this chart. And they essentially just want to make sure that the payout ratio just doesn't exceed 100%, because that's not sustainable over the long term. They plan to do about 99%. Maybe some months it's slightly over 100%, but as long as it's not like a lot over that, then it's okay. So overall, I kind of agree with the reduction. I understand why. It's kind of a bummer because it also lowers my passive income. But what do you guys think? Let me know in the comments below what you think about this. And in the TFSA over the past month, we're up 2%, or up 494. And then if we go to the all-time, we're up 2%, or up $354.43. So let's look into the holdings. We see Apple's doing quite well, up 18%. All of big tech is doing pretty well, so really good sector. I'm glad I got more Apple when I had the chance, when it was in the 140 range. And Algonquin Power, I picked up one more share, going up to 63 shares overall in this company. I really do think that they'll turn things around, so it's a good time for me to pick up some more on a discount. We see that ATD and Aritzia are both doing pretty well, both in the green. BAM and BN are still struggling a little bit, but I am pretty happy to add these while they're trading at these levels. I received just about a $35 dividend from Scotiabank, so I reinvested that right back into the company, getting myself another half a share. So that's pretty nice. Didn't have to invest any more money to get this. With Costco, they just recently announced a 13% dividend raise. Unfortunately, I don't have a lot of Costco. I have just under a third of a share, but a 13% dividend raise is really nice, and I'm certainly not going to complain about that. I also purchased one more share of ENS, which is just our Enbridge position that just gives me over 10% yield, and it pays me every single month. I also picked up 2 more shares of ETHY. So this is just my Ethereum ETF that pays me a monthly income. So just averaging down on that, I just use Shakepay every month to get free Bitcoin, and then I just sell that Bitcoin off, and then I buy this fund for Ethereum, and then it just pays me a monthly dividend. And with Google, they recently had their earnings report, and it was a pretty decent earnings report. One notable thing I'm going to bring up from the earnings call is that Google Cloud is now finally profitable. So this is actually really, really major news, because in every other quarter in its history, Google Cloud has been losing hundreds of millions of dollars for Google consistently every single quarter. And just seeing a profit from this segment, this high margin segment, is really giving me a lot of hope for Google going forward. So very happy with that result especially. And then with Intel, with their earnings, they actually posted an earnings beat by losing less money than was expected.
And totally redeem yourself.
So it looks like some of their cost-cutting measures are working. That dividend cut that they did earlier in the year is, helping them, through this painful period where they're investing billions of dollars into themselves, into the foundry business. So we'll hang on to Intel for a few more years, and we'll see where this story heads. I'm betting that it turns out successful, but we're gonna find out. And then Microsoft had a pretty great earnings report as well. They're up for me over 12%, well over $300 per share now. So in Microsoft's earnings report, their revenue is up 7%, or up 10% if not for foreign exchange impact, and operating income was up 10%, or up 15%, not taking into account foreign currency. And net income was up 9%, or up 14% in constant currency. So not too bad at all for the company. And they noticed that a lot of key segments had some nice growth. So in Microsoft's breakdown of their revenue, we can see that pretty much everything grew pretty nicely. Like Microsoft Cloud went up 25% year over year. Office products 365 are up a lot, so 17-18%. LinkedIn is up 10%. Dynamics 365 29%. We can see server products 21%. Azure, their cloud services, still growing at 31%, which is nice. The only real contractions are going to be Windows OEM licenses, down 28%. But in Intel's earnings report, they reported that they had a 36% decline in total sales. So it does make sense, if people are buying fewer devices because they all bought them up during the pandemic, then people need fewer Windows licenses. But luckily Microsoft is very diversified, so even in one of the worst historical performances for PC hardware, they're still just trucking along because they make all of their money off of software and services. Windows commercial products and cloud services 18%. Even their gaming division went up 5%, and we can see here even their own devices were down 26%, and they had a nice growth in their search and news advertising, up 13%. And if you've watched the video up to this point, please consider leaving a like and subscribe to the channel so you never miss one of my updates, and you can see my progress in my journey here in my dividend portfolio on YouTube. So the dividends earned all time is $13.6166. Unfortunately, because of that dividend cut, we no longer earn $1,000 a year in dividends. We earn $985.59 versus the previous $10.29. The monthly average has also decreased by about over $3, down to $82.13 from the previous $85.76. The weekly average has declined from $18.95 from the previous $19.79, and we've lost 12 cents a day in passive income with that HYLD distribution cut. and it takes us slightly longer to make $100, 1.22 months versus the previous 1.17, which is less time. And unfortunately, you know, our portfolio lost a bit of its wage from its 40-hour work week wage, and it's now earning 47 cents an hour instead of 49. But, you know, these are just temporary setbacks, and, you know, we are going to be receiving some dividend raises. So far, we've just been getting a ton of cuts, and it's, you know, it's pretty frustrating. But overall, you know, I'm not going to quit. I'm going to keep depositing more and more money consistently each and every month. I'm going to be reinvesting every dividend I receive, and, you know, you just have to stay motivated out there. And, you know, even if life knocks you down, or, you know, your portfolio's down a little bit, just hang in there, hang on, and, you know, keep fighting, and you will get past the point. If you feel stuck, or if you have a cut like this, or a slight setback, just keep working hard. You will get back to where you were before. All right, have a great day, everybody, and keep invested out there.